Shall we go on 2 slides? Another slide. Move on a slide. That's it. Great. Okay. No, that's the one. Yeah. So Galane Gold was formed back in 2011 when we acquired Mopani Gold from IM Gold. It was basically, I would say, an unloved asset in IM Gold. It was too small for them. It was 30,000 to 50,000 ounce producer. It wasn't something they wanted. They never really put their A team on it. And when we acquired it, they only had 1 year's life, supposedly, in it. Obviously, here we are in 2018. That's changed. It's still producing, so we got past that first 1 year hurdle. And now we believe we've got a mature asset there that will continue to produce into the future. We talk about a 4+ year life. 4 years because that's what's in the resource at the moment, plus, and then, for example, last year we had a press release announcing an additional 20 months life through development exploration, and we'll have another announcement probably at the end of this year or the beginning of next year saying the same thing again. It's juices between 30 to 35,000 ounces and has an all-in cost of around 1,050. Around that asset, we've built a really strong management team, and we need to now utilize that management team on another resource. 2015, we acquired Galaxy Gold in South Africa. Why did we acquire it? First of all, for $7 million, we got 1.5 million ounces. To me, makes great sense. Secondly, it's only an 8-hour drive between the assets, so we're not distant. We can use the same staff in both assets. All of our services, etc., are already purchased from South Africa, so we already have those connections there. Our underground miner is actually lives right next door to the mine in Barberton, so easy for him, and he's going to be using him as well. So it was just a good fit for us. It's greenstone. It's in fact the same greenstone we're mining up at Mopani. So same metallurgical, same mining methods. So it's an easy transition for us. We've just announced on Tuesday that we've finalised the funding. So we've got a $5 million facility from Barrick. We did a $2 million equity raise, and we'll be using $3 million of internal cash flows. That we use to finish the development into the 2 main ore bodies and also double the size of the plant to 30,000. And we expect to have first production in April next year of around 7,000 ounces for next year, building up to 26,000 ounces and an all-in of around $900 an ounce. So a great asset for us. It then has the potential to double the size again to a 56,000 ounce producer, but we believe we have to show that we can do the first step before we do the second step. Management team-wise, there we go, it works. Myself, I've got about 15 years worth of experience in Africa. I joined the company in 2012. First thing I did was bring new staff in. Most important person there was Wayne Hatton-Jones, over 30 years of experience in Africa. Why did I bring him on? One, metallurgical experience. We're working on refractory ores, are high in sulfur, so we're not getting 98% recovery from an ice oxide ore. We're getting 70 to 80%, and every 1% recovery at Mopani is 500,000 on the bottom line. So it's important to us. So he turned on the float, for example. We put in a high shear reactor, and we maximize the recovery there. In addition, when we purchased Mopani, it was an open pit miner, high strip ratios, 14 to 1, grade 1.6 to 1.8. That was great. Gold was 1,800, but it wasn't good for the long term of the business, and we had to transition to underground. And Wayne had done that a couple of times before. He did the transition from open pit to underground. He brought in certain individuals with him, as always in mining. They've got their own teams. Kevin is an example of one of those individuals. Kevin's not what I would call a geologist. He's a mining guy. He goes underground. He's a guy who does the mine plans for us, does the modelling, does the near mine exploration for us. We're not an exploration company. We're a producer. I brought in Gavin as the CFO. Cedric there. Cedric's important just to show what my management style's like. When I started Mopani, there were 18 expats. We now only have 2 full-time expats, and they're not in senior management roles. Cedric will be the next GM at Mopani, and it's about transitioning those skills across. 2 reasons for that. It's good for the in-country, but also for costs. I'm a finance guy. I always look to reduce costs. Then ownership structure. You know, our market cap is only 10 million, which seems strange for a company last quarter produced 10,000 ounces, had 2.6 million of free cash flow from operations. There's reasons why. One of those reasons is 60% of the company is held by management and insiders. There's not much free float. We probably have 70,000 shares traded a day, and that's about it. We've got a 20% free float, and of that, none of it is institutional, so we don't have any coverage in the market. I've got some paid-for coverage that came out on Tuesday with Edison, which backs up our view of the long-term model over the next 10 years, and I'm more than happy to share that with you. And then we've still got 12% that's a hangover from the Galaxy acquisition. On top of that, a number that normally jumps out at people is the debt number. We've got $15 million worth of debt, market cap at 10. If our market cap was 30, we wouldn't be having this conversation, but I have to have this conversation. That debt to me isn't an issue. Again, free cash flows of 2.6 million. I had a 5 million facility with Samsung. I repaid that. I had a 3 million facility with IM Gold. We repaid that. We've restructured that debt. None of it is recourse. None of it is secured. And the reality is the 7 million that sits down at Mopani has been restructured with the government of Botswana and will be paid over the next 3 years from Mopani cash flows. The 7 million in debentures is at Topco level. I've already renegotiated some of that out to 2021, and the remainder will be moving very soon. So debt to me isn't another real issue. If we flick forward, we had a press release on Monday. I'm trying to keep myself busy. That was announcing a farming agreement with B2 Gold. It's been finalised. So there's an exploration upside to Mopani as well as the production upside. So basically over the next 4 years, B2 Gold will spend 4 million, and they're looking for a 1 million plus ounce resource. They're a 100,000 ounce producer, the assets they're looking for. They approached us. Why did they approach us? Their geology team was actually the team that discovered Mopani. So they know it very well, and they're of the view that there is a potential larger resource there. We've done nothing as clever as go and look at where the red spots are on geochem, a mine there. They're going to come and do a little bit deeper, and they've got a view that somewhere up top left-hand, Rappa, is probably the place where they're going to find the big resources, where the greenstone pinches in. I'm not a geologist, I don't understand, but that's where they're going to spend their money. So Mopani to me is a great asset. It's mature, it's producing cash, and it's got an exploration upside, which we don't have to pay for. I could be a 30% free carry in a million plus resource, or I could have a smaller resource, which they don't want, 500,000, but it's going to add to the life of Mopani, and they'll give us back, and I haven't spent the money. Galaxy, I guess the slide that I like to show is this one. When everybody thinks of an asset in South Africa, they're thinking of Fitzrand, deep mine, huge workforce. That's not Galaxy. Galaxy is adit access, drive in, drive out, so it's not shaft constricted. Wide ore bodies, we're mining at 2 ore bodies. The one on the right, called Galaxy, which is 40 meters wide, 100 meter strike, 4.5 grams a ton. And then you go to the left, we've got an ore body called Princeton, and that's 5 meters wide, 100 meter strike, 5.5 grams a ton. So mechanized mining, small workforce, subcontracted, long hole stoping. What this graphic also shows you is grey where they've mined historically, and that's over 1.3 million ounces over 100 years. So the resource is well known, metallurgy is well known. Red is where the measured and indicated is, which is 600,000 ounces. And yellow is the exploration potential. And that goes down to where Pan-African, who are next door to us, are mining at the moment. So we're pretty confident that it goes down to that depth. What we're going to do with the funds that we've raised is we're going to finish the development into those 2 ore bodies. We're going to double the size of the plant, and we're going to start production there in April. We've done everything required to put that asset into production. We've got the new order mining license, we've done the environmentals, so I have no worries about that production coming on. And then I'll flip past a few of the slides. I won't show you that because you're not allowed to see it. And I'll show you that one. Comparable analysis. This is where we sit at the moment. If we are compared to Shanto, which is in Tanzania, a much more complicated area, they've had some issues with debt as well. There are multiples 0.3, we're sitting at 0.05. We're valued as an exploration company. I've talked about the reasons why. We've now got some things coming on. I think when Galaxy comes into production, you're going to see a re-rating of our share price. There's South African companies, so which ones would you say I compare myself? They're much bigger mines than us. I'm trying to pick something that's similar size to us as well.
I'm trying to pick something under the same group.
Yeah, but our main mine producing mines in Botswana. We're the only gold producer in Botswana. Yeah. Okay. Thank you.